Good morning to you. Actually, it is afternoon, probably about 12:30 Eastern time. I'm in Frederick, Maryland, of all places. So this is video number cuatro, 4, and greetings to you. I'm going to start off by saying that we're going to address a few items here, but to think of gold as currency, no, I wouldn't necessarily think it as an investment. It has that value in that aspect, yes. But the primary reason, if I was looking to diversify out of fiat currency or other paper assets, I would look at gold as a safe haven, as an avenue to have currency in your hands that you can use to trade on the market. Meaning, when I say trade, to get goods and services if in fact fiat currencies collapse. So we're going to go over these items. We're going to talk about bullion safe haven. We're going to talk about the once and future currency, and we're going to also look at an email from National Inflation Association about the extreme shortage in the Comex inventory. So let's dig into it again. So I'm starting off with the bullion safe haven. This is from Goldcore. Gold has risen to near record highs in many currencies internationally. Its bullion is again acting as a safe haven for people throughout the world whose currencies are devaluing for those who are fleeing instability, terrorism, and war, if you're sitting reading the news. Gold is not reaching record highs per se. Rather, paper currencies are losing their value or are being devalued. Throughout the world, people hold gold to protect their purchasing power. That's the prime reason to hold it. People on all continents are being protected by owning gold. People in the Ukraine and Europe, Syria and the Middle East, South Africa, Brazil, Argentina, and South America also seeing their currencies devalue rapidly as competitive currency devaluations. Goldcore expects currency devaluation to deepen and intensify. It is complacent in the extreme to assume that fiat currencies such as the US dollar, euro, and pound are immune to these and that to major devaluations, hence rediverting assets into gold, silver, platinum. Of course, we talk about primarily about gold. So that's that on that particular article. The next one is gold, the once and future currency. This is from Daily Reckoning. Is gold off the bottom? No one knows for sure. If the Fed raises interest rates on Thursday, which we don't expect, the effect will be highly deflationary and gold prices, they could move lower. It's unfortunate the markets reduced to reading Janet Yellen's mind, who's the head of the Federal Reserve, to determine what to do. There's 3 factors that are affecting gold prices or the dynamics of gold. One is real interest rates, dollar strength, and central bank intervention. Looking at so right now we know that the gold, or the actual real interest rate is a negative 1%. That's 1 to minus 2%. So that definitely affects where gold is. The second factor is dollar strength. There's a correlation is even more striking if you consider gold to be a form of money or currency, which I advocate and which Daily Reckoning does and many others. Then it's easy to see why the strong dollar signals a weak dollar price of gold, and a weak dollar signal a strong dollar price of gold. So the third factor is central bank intervention, which has been major intervention into the marketplaces. Here's the case straightforward, a simple matter of supply and demand. Mining output has remarkably constant over the recent decades, about 2,000 tons. So with the manipulation by the London Gold Pool, by EMF, there's definitely been a major factor in holding gold prices down. The last one that we're going to go over is this is an article by the NIA, National Inflation Association. Back on August 3rd, the NIA reported to its members that Comex was down to a record low of only 351,000 and change ounces of registered gold in its physical gold inventories. At that time, 43.5 million ounces of paper gold was open in the futures contract. That's a record low of 0.8% of paper gold being backed by the physical gold. Disturbingly, over the last 6 weeks, registered Comex gold stocks have declined by 53.5%. It's a new record low. Their holdings right now, 163,000 and change in ounces. This compares to 333,000 ounces of gold currently open in futures contracts. A new record low of 0.395 paper gold is currently backed by physical gold. So what am I saying here? Once the news comes out that there's not much gold in the marketplace to back up this paper trading, well, how do you think that will affect the price of gold? It's something to consider. So we went over the safe haven of gold that people nationally are getting into gold and gold bullion, gold ounces, and gold grams. Also, we talked about the currency of gold once in the future currency. Eventually, as paper currencies, fiat currencies collapse, we will see gold, silver arise to be more favorable currency that will be traded on the local markets. So below, I'm going to ask you to subscribe to my channel. I'm also going to ask you to pass this video if you think it's of value to one other person, just so they can give it a look-see. And I will do a better job to get these out every 2 weeks. Also, I have a web fan page on Facebook, Richard A. Lane and Associates Incorporated. If you type that in the search bar, you can like that page there. So that's all for today. Thank you for your time. Remember, gold, think of gold as currency. Good day.